If you have an IRA over $500,000, you're going to get hit with taxes in retirement, so it's important to plan for that. And I'm going to give you an estimate of how it works and what they are, and then some steps you can take to plan for it. My name's Denver Noahs, President of Wealth for Life. I'm an 18-year independent advisor and fiduciary. My mission in life is to help people avoid financial mistakes with good education. So this is going to help. Now, when you get down to retirement, you're going to have this 401k. You're going to roll it over into an IRA. That money is going to come out taxable, right? Taxed as ordinary income, so just like it is today. A lot of people aren't planning for that, but they still got to pay those taxes through retirement. Now, let's say you have this $500,000, IRA. You're here and you're age 60, and maybe you have your pensions or Social Security or you have other sources of income, like some people do, and you've obviously been a great saver, and then you're going to let that money go. Well, just kind of continue to grow. Well, at age 70, right? So here, age 70, the IRS does this thing called RMDs. RMDs are the forced distribution. So they're going to make you take that money out, whether you want to or not, and pay the taxes out. Now, in this example, let's say you go out there and you live to age 90, right? And your income is in a 22% bracket. So right now, where taxes are right now, anything greater than $78,000 a year is going to be taxed at 22%. Okay, so if you just have this $500,000 IRA, it's growing, you're going to pay the taxes on it using the RMDs that come out. What does that number add up to? $250,000 in taxes. $250,000 in taxes over the course of age 70 to 90 just by forced distributions, from the IRS. Now, have you been planning for those? Probably not, and it's a big number. The other thing to worry about is when we're talking about this amount in taxes, this is at the 22% bracket right here. Okay, we know that the current tax laws, these taxes, the tax cuts we have now are going to sunset in 2025. So what do you think is going to happen there? Taxes are going to go up or down? Potentially could have more money that you're going to even owe in taxes just based on the RMDs. Now, if your IRA balance is higher and you've saved $1 million, that number is going to be bigger. So taxes are a big liability. So then what do you do from there? Well, you look at things like Roth conversion, you look at things like life strategies and other strategies you can do to get money in a tax-free position, but you don't want to wait to age 70. There's a lot of data that shows if you start this at age 60, like as soon as you get to age 59 and a half, you can start some of these strategies. Depends on your work situation and whether you still have income, but you want to start looking at your tax brackets and working with someone and having the conversation that says, hey, what happens, what can I do to minimize my taxes later on in life? And maybe you can take this number down from $250,000 in taxes, down to, maybe you can get it to $100K, right? Maybe you can save $150,000 in taxes by doing a little bit better planning. But make sure this is part of the conversation you're having when you're planning retirement, having tax diversification, taxable money, tax-deferred money, tax-free money, get more money onto the tax-free side of things. Hopefully this can help, and just put this on your radar. My name is Denver Noahs with Wealth for Life. Make sure you follow our Facebook page, Wealth for Life News, to check out some of the videos and stuff that we have. Thanks again for watching.